So I'm Marvin Cole, founder and CEO of Ovamba, and this is my colleague Richard Angus, our CFO. I want to describe what Ovamba is. So Ovamba, we consider ourselves a booster rocket for SMEs. We provide what we call growth as a service. What does that mean? It's really about inventory finance, inventory funding for SMEs in the import-export sector of West Central Africa at this stage. We've originated more than 80 million euros over the past 3 years, and we've helped those SMEs grow from between 50 to 700% during that time. The capital comes from a global base of investors, Japan, US, Europe, and they're quite happy. Now, one of our current clients, Mr. Chassis, great entrepreneur, but he was considered unbankable in the local environment. And there's someone that was experiencing what we call cash flow hell. I'll just explain what that means.
Okay, so in the world of cash flow hell, what happens is our client finds themselves having to purchase their goods generally from the Far East. They're waiting 90 days for a shipment to arrive, and then they'll go through a process of approximately 60-odd days rotating that shipment out. They now then have their cash on hand, and the cycle begins again, and we wait 90 days with no stock availability, having to turn customers away. Suddenly we now have a shipment arrive, go looking for the customer base a second time around, and the cycle just goes over and over again. So fundamentally, what we're helping the client to do is we're taking the inventory component out of their business, and we're in a space where we're able to effectively shorten that or get rid of the 90-day ordering cycle and having their goods available for them to sell on an ongoing basis. So they're not going through the ebb and flow of the 90-day, 60-day cycle. So that's fundamentally what we do from an inventory financing perspective. Now, if you have a look from a bankability perspective, the challenge is always, there's a number of challenges. I want to just focus on the three that you see across the middle there. Lack of SME and industry knowledge is a key issue in this market. The financial institutions, particularly in Central Africa, have absolutely no handle on what's going on in the SME environment. Financial records obviously are very limited or non-existent in many cases, and the challenges around business execution failure or risk is extremely high because they just don't understand how these businesses make money. If you have a look at the size of this market, you've got $1.3 trillion sitting in the, let's call it the interest earning capability in the market. $25 billion of that is sitting in the, let's call it sophisticated asset-backed part of the market, your traditional mid-corporates, your African multinationals. We're not even talking there of the corporate market. That's just, let's call it the local business space. $368 billion is sitting in the layer below that, and that's your missing middle companies. The companies that just, they've got the need, they're involved in industries that banks don't understand, and fundamentally they just don't have the records and the infrastructure to support a lending environment. And then right at the top there, you'll see the $907 billion worth of informal business, remembering only 20% of Africa is formally employed. The rest of the people are making it happen through hustling and doing what needs to happen. Limited collateral, no records, a real challenging space. So we're targeting those two middle components in the work that we do. So fundamentally, what are we doing from a transaction perspective? A transaction anywhere from 5,000 euros to 500,000 euros is a typical transaction size. Terms of between 6 to 12 months. We're currently in, let's call it the fourth cycle in the life cycle of Ovamba on that side. Please remember, we are providing assets to the customer base. We're not actually we don't give them cash. We go out there with them, go and purchase the goods that they need. Those goods move to us, so we control, you'll notice there, we control the logistic functions, warehousing functions, etc., so that we have control over those assets. And when it comes time for the client to sell those assets, we then make those assets available, they pay us for the assets, and we effectively trade the inventory with them. You'll see there a map. You'll notice our locations throughout Cameroon in terms of Douala. Number of warehouses. We obviously have to be on location and available for clients in the place where they're trading business. You don't want to be moving goods all over the show in Douala. If anyone's had the pleasure of spending time in Cameroon, you'll know that that's can be a fairly big challenge. So we've got a presence where we've got warehousing throughout the region.
Right. Now, Ovamba is a team effort. That's right, two of us here. But a team isn't just the two of us. We're almost 60 people around the world. World-class team. Richard is a former CFO of F&B Corporate, ex-McKinsey. We have ex-Rothschild, IBM, etc. But if you look at our team composition, roughly half the team is in risk and tech. That's really our core focus. And our analytics function is amazing. I'll talk about, we'll get into the tech side a bit. Part of what we focus on, the reason we're in Douala, is that we are focused on choke points of trade. The cities and areas that drive most of Africa's imports and most of Africa's GDP is actually driven by trade, 70% roughly. The technology function is critical. It's an enabler to what we do. It allows us to analyze risk both from point of view of ability and willingness to honor obligations, as well as make us extremely efficient in market, from sales to back-end to mobile, and we even have our own core banking system that pulls data from banks themselves that we sell into the market. The model is designed to scale. Cameroon is unique in Africa in that it's dual legal system, English and French. It's also significant Muslim and Christian populations, and neighbors Nigeria, so we've tested this model in actually the northern Nigeria zone, as well as other French-speaking zones as well. And portfolio?
Okay, so just in terms of the portfolio that we're looking at, right now we're able to fund and look at only 12% of the business that's come to us, just from a pure funding constraint issue. So if you say, where are the constraints in the model, it's on the funding side. We've had a look at about 80 million euros worth of transactions. We've funded 10 million euros of that already over a period of time. Current book size is sitting at about 6 million euro. And if you look at from a security perspective, people always ask the question, our general coverage is two times at least in terms of the assets that we're holding versus the transaction size. Thank you.
I think that covers it. So, any questions?
Thank you. Questions from our judges?
Thank you, guys. I think I saw on your website 2% default rate.
Mm-hmm.
That's right. How do you manage that? That's excellent. And just maybe following on from that, how do you manage the risk of dead stock that might arise from cancelled orders and things?
Yeah.
Great.
Okay, so just in terms of default rates, remembering, of course, that this is effectively, if you were to look at this from a banking perspective, it's asset-backed. We actually own the asset. So fundamentally, when we're looking at a transaction, we're looking at the nature of the asset, the market for the asset, and the ability to resale if our customer doesn't actually engage with us. Now, the Cameroonian law is a function of the harder legal system and accounting system, and it has a very interesting piece of legal component in it, which is what's called an automatic repurchase capability under common law. So if you sell or if we purchase an item, we have the ability, or the person who sold it to us has the ability to repurchase it from us under common law as long as we give them that right. What that does, though, is it allows us to resell to them as the primary customer, or should they not wish to exercise that option, i.e. they can't pay, we immediately can on-sell to the next available party. Given the nature of the products in the Cameroon environment, we look at things like tires, mayonnaise,
soap, toilet paper, commodities that quickly
all the consumer products that are moving and fast moving. So no challenges in that space.
From the product subset that you're exposed to, when you scale this entity, would you be doing it via scope in terms of new products, or would you be doing it in terms of volume, in terms of the kind of subset that you have, you're comfortable with because you understand it, and would you be adding volumes on top of that, or would you be adding a scope to that?
We could probably do both. We could probably do both. I would say to you, though, given the type of transactions that we're looking at, and our inability to service that full market, we do not have a problem finding customers. They come looking for us. It's a case of making sure we understand the risks, making sure we understand their layout and what they're doing, and making sure we're comfortable with that. The customers tick the box there in most cases. Interestingly, a lot of our business actually comes through referral business. So we're dealing with Mr. Chazluk, and the referrals come. We also are quite strong in connecting our networks. So, for example, the guys that are in the logistics business, that we might, they may say, okay, we want to buy a truck. We're then dealing with guys who import motor vehicles and trucks. Oh, and there's guys over there who do tires. So we connect our customer base so they become customers of each other, which helps significantly.
Would it add complexity into the system if you were to add a multitude of scope products? Because effectively you're taking this onto your books.
Yeah.
Not really.
No.
No.
No, not at all.
For two reasons. One, we're actually quite asset light from point of view of the operational background. So the warehousing function is actually on an on-demand basis. Customers sign over their warehouses to us and all assets within it, which means that we take over logistics. Therefore, we scale without the cost.
Yeah.
So long as we're comfortable that we can liquidate, and in the markets that we focus on, the issues about availability of product, and we choose the products that we know we can sell, that people need. You always need toilet paper. You always need soap.
In Cameroon, you always need mayonnaise. I don't know. It's a very popular product.
Yes. Fashion items we really don't deal in.
Yeah.
So you'll see that, I think earlier there was people with used clothing, etc. That is something that does move very quickly. But
Careful
things
about
are
that.
brand new, high-end items we don't deal in, for example.
Yeah.
So we do choose.
So do you see any competition from traditional wholesalers getting into a slightly different model? Because you've obviously introduced a great idea. So how do you compete against the big guys coming after you now?
Yeah, look, I think the key point is we're partnering with our customer base.
Yeah.
They are going to experience competition from the big players, obviously. There's a number of challenges that the bigger players have to deal with on the ground. The nature of the Cameroon environment, it's a choke point of trade in the region, in terms of about 70% of stuff that flows into that region flows through Douala, for example. It's a very informal economy, and it's structured informally. So your big traditional players, it's a little bit of a foreign presence in the market per se. And yeah, there are issues around trust. So, people, when they're dealing, and you've got traders coming in, they trade with the people they know. So if a big player is in the market, they're a little wary. So we're choosing to partner with, let's call it an established market. But yeah, it's going. That pressure will come over time. But I think if you look at the market as it stands now, there's enough space for everybody. There's a big
I'd say
runway
20
there.
years easily.
I'd say 10 to 15 years.
Yes.
This is Central Africa, where the environment is
Yes.
quite far back.
And that's actually is our focus. Sorry, I know you have a question, but our focus really is on the most frontier markets. So places like Chad, Central Africa, going into DR Congo, etc.
Yeah.
In our model, we really fundamentally disrupt one thing. The failure risk for the businesses is eliminated because we control a lot of the key functions effectively. Frauds will also reduce significantly because, again, we control the physical asset itself.
Yeah.
And we enable people to grow in a way that they normally couldn't.
Yeah. Just another comment. So fundamentally, what we're helping do is we pick countries and frontier countries where, let's call it, the velocity of money is basically zero because it just doesn't move through the system. And all we're doing is helping move and accelerate that process.
Yes.
Huge
Please.
runway.
Right, great. On your financials, how profitable is your business? And you mentioned in your slide, you guys are looking at 450% revenue growth, 2017.
Okay, so that 450,000 was in our example with our customer.
That's our client for next year.
That was our customer. Okay,
Yes.
so this effectively taking out that 90-day lag for him in his trade cycle effectively has allowed him to accelerate his growth to that sort of level. And yeah, in his case, he's supplying motorbikes and motor parts and lubricants. And if you know anything about Cameroon and Douala particularly, everything happens in that space.
So how profitable is the business?
Our business in terms of Ovamba, we've been going now two and a half years.
Yeah, 3 years.
Obviously, there's a ramp-up period, but from a profitability perspective, the book is profitable at this point. Thank you.